Hey VV Nation, welcome to our channel. My name is Glenn, Senior Stock Market Strategist for VectorVest. Glad to be here, glad to have you here. For the next few weeks on Friday, I will be releasing videos on technical analysis. Starting with this week on moving averages, then I'm going to talk about candlesticks, trend lines, support and resistance, and then three very good technical analysis setups that you can use only in the VectorVest software to help you as well. So hopefully you're going to like this series, and it's going to start off with the magic of moving averages. No matter how you invest in the market, I'm going to show you three different ways, no matter how you invest in the market, to use moving averages to help you increase your probability of making money in the stock market. So we're going to go straight into the VectorVest software, and I'm going to start off with just looking at the top VST stocks in our database. These are the stocks that are sorted by our master indicator, VST, value, safety, and timing. But a lot of people say, man, I went and bought your top VST stocks and I lost money. Well, there's a couple of things that happen there. One, you need to know what's going on in the market. If the market's moving down, even our best stocks will probably be susceptible to pullbacks in the market. Even the best stocks. So market timing is always going to be front and center before you start anything as far as analyzing a stock from a technical basis. Now, number two, technical analysis is only based on two things: price and volume. There's a lot of different technical indicators that are out there. We're not going to go deep into all of those. And again, in this series, I've picked out certain things that I want us to pay attention to. But I know a lot of you have a lot of different technical indicators that you use. And always remember that they're only based off of price and volume. And you just got to find what works right for you. We're going to talk about moving averages today. So even if you're brand new to the VectorVest software, we give you the best stocks in the database by value, safety, and timing. Depending on how you invest in the market, is it the right stock for you? All right, so here they are. I'm going to simply click on Graph All, again, from the stock viewer, looking at the top 10 stocks in the database. I'm going to put this on a 1-year view. All right, actually, no, we're going to keep it on a 3-month view, 1 quarter. Now, the first layout I have is looking at the 3 and 8 exponential moving averages. Now, I'm going to take those off for a second, and I'm going to now just add, I'm going to tell you the difference of what the 3 different types of moving averages we have. We have exponential, we have simple, and we have weighted. I'm going to add a moving average, and I'm going to put a simple 10. I'm going to click on price again, add moving average, exponential 10. I'm going to do it one more time. Click on price, add moving average, weighted 10. What is the difference? You know, we're talking about moving averages. What is the difference between the 3? Let's go put on a simple moving average, a 10-period moving average. Notice how it gives price a little bit more room before it crosses above or below. So an entry point on a moving average is when it crosses above your moving average. That's a good time to be in the stock. Crosses below the moving average. That's a good time to be out of the stock. All right. Let's go put on an exponential moving average. And notice how it tracks price a little closer than the simple. Exponential moving averages means that exponentially each value becomes more important in the moving average. All right, so it's still a 10-period moving average, but this one is exponential, EMA, and it tracks price just a tad bit closer. What that means is it gets you in and out of the stock a little faster. Now, we're going to go to a weighted moving average. Wow, notice how it tracks price a little closer than the other two. Why? Because a weighted moving average puts more weight on the most recent data as it sets up moving averages. Do you know how moving averages were made? Well, here's a tidbit of information. Ships, as they navigate through the ocean, to throw the enemy off, they move around a lot. But they draw lines to show where they should be at a specific time. And the enemy doesn't know that, but they use those lines, those moving averages of time and distance, to put a ship in a specific spot at a specific time, and the enemy doesn't know that. So moving averages were derived from the military. just a tidbit of information. Even as I'm talking about moving averages, I think I needed to at least show you the 3 different types of moving averages we use and why you may choose one over the other depending on how you invest in the market. All right, I'm going to take those all off, and we're going to go back to the 3 and the 8 exponential moving averages. It's right in the middle between the simple and the weighted, and I like that as a purpose or a way to get in and out. Now I'm using 2 moving averages. We already know that if price goes above the moving average, it's a good time to be in it. If price goes below the moving average, it's a good time to get out of it. But now I'm using 2 moving averages. What I'm looking for here is for the slower moving average, the 3, to cross above the, I'm looking for the faster moving average to cross above the slower one, the 3 crossing above the 8. And I've got them as green and red so I can clearly discern when one crosses above the other. The 3 is the faster moving average, the 8 is the slower. Crossovers. Now we're looking at moving average crossovers. Boom. This is a good time to be in the stock. If I'm a little bit more of a trader, I get out, wait for a better opportunity for the 3 to get back in, blah, 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 blah. From a trader's perspective, this is a good way to get in and out of the stock. Now, I also have things on here like relative timing, and that's our technical indicator. When RT is above 1, it's a good time to be in the stock. And then I also like to look at the earnings per share. Long term, do I like the stock? Let's go through these quickly. Next one, GRB. Nice crossover. Get in, get out, get in, get out. Now recently setting up as a get in. Love the earnings per share. Let's go through these again quickly. DHR, new DHI, new crossover opportunity. Looking at Lifeway, good opportunity to stay in. And this keeps you from getting in and out, in and out. Even on a trader's perspective, if it's solidly in play, you stay in the stock. Earnings per share looks good. New earnings, moving average crossover on Toll Brothers, BMA, nice move here, still in the stock. And we'll just go, wow, that's a beautiful looking stock. It is overvalued, but look at the 3 and the 8 keeping you in that stock long term. This one, MHO, new 3 and 8 crossover. All right, let's go look at another layout. Let's go back to graph. All right, and let's go all the way back up to the top. Let's go graph layout. For those people who are swing traders, why not look at a 20 and a 50 EMA? Both of them are slower moving averages that will keep you in the stock longer. Now, on GGAL, the 20 cross above the 50. I like using the 50 as a sense of a trend line. Either one of these, because they are longer, slower moving averages, can serve as a trend line as well. 2050 cross, you're still in it. Love the earnings per share. RT is above 1. GRBK. Now, even as the stock pulls back, if your moving averages are intact, you leave it alone. This is all about planning your trade and trading your plan. Next one, DHI. We've got the crossover here. Look at that, the 20 and the 50, even on the pullback. And now how about you can use the faster EMA as a way to possibly get out a little faster, but you're swing trading. Leave it alone. As long as the 20 is above the 50, you're going to be good. Next one, Lifeway, 20 and 50 cross here. You got to love it. And undervalued, love the earnings per share. Next one, Toll Brothers. Nice crossover here. Even on the pullback, notice that the price went below the 20 and the 50, but the moving average is held. Great way to still stay in the stock without getting in and out all the time. All right, let's go to one more graph layout. Click on Graph All once again. I'm going to go down to Graph Layouts. I created one more for you. The long-term investor, the buy and hold investor using a 50 and 200-day moving average. This is sort of like the set it and forget it. The 50 and the 200 crossing pretty much is something we call the golden cross. How about GGAL? Back here, the 50 crossed above the 200, and you know something? They never crossed to the downside, which would be the death cross and keeping you in the stock long term. And look at the earnings per share. For those people who want to buy it or set it and forget it, the 50 and the 200 is a good way to get in and stay in. Same thing with GRBK, 50 and the 200 cross. They're still doing good. Now, there's a downside to this. It's going to take a long time for the 50 to cross below the 200. But remember, if this is for my retirement portfolio and I really don't want to trade, I think the 50 and the 50 and the 250, the 50 and the 200 serve as a good way to get in the stock and stay in the stock, no matter what happens. If the 50 crosses below the 200, that's a good time to get out of the stock. Couple of more. Ooh, how about here, Lifeway? Nice move on the 50 and the 200. Look at the big fall. That is the downfall. Notice the 50 crossed below the 200 here. That's a good opportunity to get out. And now you're back in. Stock is undervalued. Looking at the earnings per share, that's what it's all about. So yes, I didn't look at every single stock. I just wanted to give you an idea of the magic behind moving averages and the different types of moving averages depending on how you invest in the market, which one best fits you. Now, you can create searches that find these moving average crossovers in the VectorVest system. Simply go to the Unisearch tool, and within the Unisearch tool, you can build a search. I'll build one on the fly for you right now. Stocks, price volume, let's go price actual greater than $1. Okay, well, you can put whatever you want here, right? Now, let's go to stock price, volume, split adjusted, operator, Pro Trader. You do need to have Pro Trader in order to use the moving average crossovers. Now, you'll notice here we had moving average, relative moving average, MACD crossover, EMA. If I want an EMA, I click on it, which is exponential moving average. Click on that, and I can set the terms. I want to set for this one a 3 crossed in the past 1, whatever amount of days you want to use. Let's say 5 days. Within the last 5 days, crossed above the 8 EMA. And I like to check this box, both averages moving up. I want to have confirmation. Click on that, and as of today, as I record this video, I run the search, I can find all of the stocks within the database that are greater than $1. I would probably put some volume in here too. Let's do that real quick. Let's go stocks, price volume, average volume greater than, and let's go type in a custom value of 100,000. I want to make sure I've got liquidity in these stocks. Let's click on one search. Remember, out of 9,000 stocks that we track, very quickly I can bring the top 10 stocks. These are stocks that we did look at in the list, right? 3-8 crossovers, Pulte Homes, MI Homes, Toll Brothers, AppLovin, New, NVIDIA. How about that? ESOA, EME. Now, for those traders, I run that. I look at these stocks. I can see that the 3 and the 8s have crossed. If we graph these real quick, let's go put this back onto graph layout. Put this 3 and 8. Remember, the 3 and 8 crossed within the last 5 days. How about GRBK? All right, crossed. Look at that. That's within the last 2 days. DHI within the last 2 days. Within the last 5 days. 1, 2, 3, 4, 5. There's the 5th day. 1, 2, 3, 4, 5. Within the last 5 days, the 3 and the 8 cross. All right. Within the last couple of days. Within the last 3 days. Within the last 2 days. Within the last 3 days. How quickly can we do that? So if you like the idea of using moving averages, great. These graphs will help you out on any stock that you have. If you want to specifically find a stock that meets the criteria that you're looking for, let's go one more time. EMA, and let's go use the 20 crossing above the 50. Whew. Within the last 5 days, I can do the same thing. Run the search and do the same thing again where the 20s have crossed above the 50s within the last 5 days. Let's change the layout to the 20 and the 50. Look at that. That's within the last couple of days, the last 2 days. Well, that just crossed. That probably pulled back today. All right. Within the last 3 days, I'm just watching the moving average crossovers. Within the last today, the 20 crossed above the 50. Wow. Within the last 5 days, the 20 has crossed above the 50. So with VectorVest, moving average magic is amazing. But you can still build, if you like any one of those specific ones, you can create a search on the fly to find those stocks. Hopefully you guys found that useful to you. If you're brand new to the channel and you like this, again, for the next 4 or 5 weeks, I'm going to be doing all kinds of technical analysis, different ways that you can make money. Don't forget to share this. If you're new to the channel, hit the subscribe button because you don't want to miss any one of these videos in this series right now. If you're a regular, make sure you hit the like button, share this content. This can help a lot of people out there, all right? No matter what stocks they're looking at, these different videos are going to help them all. And again, we're going to talk about candlesticks, trend lines, support, resistance, and 3 technical graph layouts that you'll only find within the VectorVest system to help you as well. Folks, this video is over. Thank you for joining me. And again, don't forget to hit the like button and share this link. See ya.